In this video, we'll first explain what Volatility Crusher is, how it works, and what it includes, and then cover a real example on a chart so we can explain how the parameters work in a hands-on way. Volatility Crusher is a breakout and breakdown detection indicator that comes complete with entry and exit signals, as well as our new instant efficiency technology. It's all about analyzing trends in volatility, compression, and expansion, and signaling the moments where price explodes into a trend. It takes a unique and innovative approach to identifying these high-quality breakouts and breakdowns that we'll get into later in this video. It includes two indicators in one: Volatility Crusher signals for visualizing the trading signals, targets, and stop loss on the chart, and Volatility Crusher tunnel for visualizing the more involved process of compression and expansion in a subplot. It's currently available for TradingView, NinjaTrader, MotiveWave, MetaTrader, TradeStation, and more. As mentioned earlier, it includes our new instant efficiency technology, which lets you optimize the indicator's parameters to ensure the highest quality results. Regardless of the symbol or time frame, IET is going to help set you up for statistically reliable signals, much like an instant on-chart backtesting. Volatility Crusher will work on any symbol and time frame it's applied to, but since it's built to trade price breakouts and breakdowns, it's usually most profitable to apply it to symbols with a relatively high range and volatility. For example, let's take a look at ACMR on the 30-minute. This is a stock with a relatively high daily ATR, making it a good candidate to catch explosive moves. Applying Volatility Crusher to the charts, the default settings are already giving efficiencies well over 60% in both directions. This is basically telling us that when we take a long trade, we have close to a 70% chance of hitting at least our first profit target before our stop loss, and about a 65% chance of doing the same for short trades. Let's take a look at the parameters so we can explain them and increase the quality of the entry signals. The look-back period sets the size of the areas in bars that we look back over to calculate relative compression, expansion, and price breakouts. Expansion and compression are displayed in Volatility Crusher tunnel as the expansion plot. Lower values and dips indicate increased compression, while higher values and upward spikes tell us that price is relatively expanding compared to the look-back period. The average expansion is shown as the yellow mean line in the middle here, and the upper and lower bands are standard deviation bands. When expansion crosses above the upper band, while we simultaneously have a technical breakout or breakdown, we have a potential entry signal. This is where the smoothing period and standard deviations multiple come into play. The smoothing period sets the look-back for finding the average expansion as well as the standard deviation. The standard deviations multiple sets the distance of the bands from the mean and decides just how much relative expansion we need to consider a bar truly explosive. So increasing the standard deviations multiple is going to signal out the more rare, extremely explosive signals, while decreasing it will greatly increase signal frequency. However, not all of these potential signals will pass through our filtering parameters. For example, here, we can see expansion spike above the upper band, and yet we have no signal. This is because there are actually 4 conditions for validating a signal. The first is expansion crossing the upper band. The second is that there must be a technical breakout or breakdown relative to the look-back period, meaning that the explosive bar is pushing to new highs or lows. The third is trend direction, determined by the fast and slow trend periods. When the fast moving average is above the slow moving average, we allow long signals and filter short signals, and vice versa when the fast MA is below the slow. Finally, the fourth condition is that the relative volume requirements need to be met. If require volume is enabled, then entry signals will only be triggered when the volume for the explosive bar is greater than the volume average by a factor of at least the volume multiple. By default, this requirement is disabled, but it can often really improve the quality of signals, especially on symbols where large spikes in volume are highly indicative of a powerful move or are generally unusual, like ACMR here. And in fact, when we enable require volume on this symbol, we see our efficiencies increase to over 80% in both directions, meaning a drastic improvement in signal quality. You can then adjust your targets and stop percentages to see how you can improve your risk-reward expectations while maintaining good signal quality with the help of the instant efficiency statistics. The target and trailing stop distances are based on the range of the zone from which price exploded. There is also a trading style option to let you filter for entry signals in a specific trade direction. Finding the best settings for a chart is really a process of elimination and adjusting the parameters to get the best statistics. But regardless of the symbol or time frame, we're confident that you'll be able to find a profitable setup. Thanks for watching and for being a part of our community of traders.